Welcome back. This is the market. Just want to take a look at what's going on with the Nifty Bank because this news that came as a shocker to everyone this Monday morning with respect to HDFC and HDFC Bank's merger has really driven momentum in the Nifty Bank index. Take a look at the kind of volume buildup as well that you're seeing in the individual stocks. And it's not just HDFC and HDFC Bank, but the entire group of stocks like HDFC Life, HDFC AMC as well that are active in today's trading session. Let's connect then with Sandeep Tandon as well. He's CIO Quant Mutual Fund and joins in on the show. Thanks so much for taking time out. Sandeep, can't help but, stare at those two stocks of HDFC and HDFC Bank. Very difficult to peel our eyes off it. And I just want to start off, lots to talk about, but just want to start off by getting your initial take on what this news means for both these entities.
Obviously, it's a great news from the larger shareholder perspective, and it was quite evident for quite many years we have been debating. But let me also highlight the challenges now. So far, market is celebrating the euphoria is there about this good development. But as a mutual fund, there is going to be a big challenge. We have seen similar issues in Reliance when the weightage has moved up significantly. We have issues with the 10% limit. Okay. Now with the bank, another important aspect, you have a 5% limit. Okay, you need a RBI approval, and nobody can own more than 10%. So this euphoria which we are talking about, that FII ownership can be increased by 7 to 8%, but we have to also look at what impact would happen in terms of selling pressure coming from the mutual fund side or the institution side. Okay, and also there will be further impact in terms of what the weightage will decline for the other stocks. Okay, so it has its own ramification. We have to evaluate this thing very closely. Yes, very, very positive, very constructive, but it has multiple challenges as a portfolio manager. And globally, nobody likes to own more than 10% in a portfolio, which is the guidelines out here. Actually, people don't more than 5 or 6% weightage. Okay, so now with this combined entity, we have far bigger problem of allocation from a risk perspective. That is something we have to keep in mind before celebrating too much about this development.
So, that's a very great point, Sandeep. And I must add, the first one in the market right now who's actually raising that pertinent point. So what's the message to the retail investor out there? Because they are thinking that this is going to be the largest banking entity. Looking at those double-digit gains, HDFC is now up 15%, HDFC Bank up 12%. And they're thinking, quickly, let's buy it before we miss the bus on this one.
So this is how classic euphoria happen, and we have seen now complacency setting it. So it's a clear indication that market is heading for a smaller correction, or consolidation. I will expect definitely correction because we have been talking about 2022 will be challenging. Whenever you see a euphoria, you see signs of complacency, you need to prune down. Whenever you see a crisis or panic, that's the time you add. So I will play not as a contra call, but it giving me some signs of euphoria getting built in some of these names. So slightly turning cautious, okay? And if you recollect in your last show, I was very early to talk about that I will not be surprised to see Nifty touching a lifetime high in the month of March. Maybe now it's happening very closer to April mark. So we are closer to those numbers, okay? So I'm very constructive for both from medium and long-term perspective, which I said we have not seen the top in the Indian equity from a multiple predictive analytics model which we run. But we have to be very cautious because we have been seeing some amount of complacency getting set in now. And that's the time I'm generally very cautious.
Sandeep, one thing is what HDFC Bank and HDFC do in the near term. The other thing is also, given their high weightage on the Nifty Bank and even the Nifty, what impact it has on the market per se as well. For instance, this morning you had a flat Nifty, all that was holding up was HDFC Bank, and then some of these other banks began to pick up, Reliance put on some more weight. But having said that, whatever said and done, we're back at 18K. I mean, in the month gone by, we've had crude behave like a mid-cap stock from 130 settling at 100 and maybe perhaps lower in the days to come. Fed has already moved on, one hike. You've got the RBI policy coming up later this week. You've got war as well. And COVID is done with, and inflation is a stark reality, and soon you'll have earnings as well to deal with. So, wanted to understand, the fact that markets have really managed to climb the wall of worry. We're back at 18K now on the index, having to, sort of tide all these storms and waves that we've been through. What's the market view now going forward?
So as I said, this is the year where the volatility will remain very high. So you have to time it quite relatively better basis on the way fear and greed psyche works very well in this market. And I think what is more important to understand is the money flow analysis. So we have to look at the portfolio on regular basis and try to see where money flow is increasing. Okay, and that's a way which can generate some amount of alpha for you rather than just looking for a very diversified portfolio or just trying to get very excited when markets started rallying, and then try to give up when markets start correcting. So I think the challenge for 2020 years is that how well you keep on switching your portfolio or rebalancing your portfolio. That is the trick which we have to adopt, and that's the only way to generate alpha in 2020.
So you have to continue to regularly tweak your portfolio is the word that's coming in. It's more about swing trading than theme trading these days. But Sandeep Tandon, when you do say that, and we're talking on a day with the Sensex back above 60K, Nifty topping 18K, and a lot of it thanks to the HDFC merger news. We've been waiting for the banks to outperform, particularly the large caps. Can today change the momentum? Before the merger news, we had that strong operation update from HDFC, about a 20% growth as well.
So I think definitely from the sentiments point of view, it's a great news. Okay, it definitely showcased from a longer term perspective, gives us comfort that financial is the theme which I have been talking about for a while. Okay, this is the theme which has opportunity to outperform the technology. Okay, and it has played out quite well in last maybe 3 months time frame or so. And I think we remain equally constructive on the financial as a theme. But I also highlight that is very vital, when you have to understand, when you have to prune down these exposures and ability to rebuild exposure when market corrects significantly. So it's all about how well you balance in your risk on and risk off environment. So we are constructive from a longer term perspective, but we have to play in a very tactful manner.
Okay, in a tactful manner. So Sandeep, and then when we're seeing the market stage the current recovery that we have in the last 1 week, last Monday we were talking about 17,055 being the support level, right? Today we've seen the Nifty go above 18,000, and you're talking about regularly tweaking portfolio. Can I ask you some of the important changes you made in your portfolio in recent times?
So we have started, as I said, we have added last 3 months, we have pruned down our technology stock completely and we have added financials. We have started building exposure in pharmaceutical space. We continues to maintain a high exposure in metal and commodity stocks in general. We remain very constructive on the energy and power space, and given the opportunity, we have added some of these names. So it's in the environment when we're talking about that inflation will remain elevated, it's not a transitory in any manner, it's a very structured call. With that background, we believe that the commodity story is going to last for a long period of time. Like agri-commodities, if I have to talk about, I think it's a structure story, this is the theme which we have been talking from 2020 to 2030 to the agri theme. And commodities can give you between 100 to 1,000% returns. So you can imagine what sort of inflation we are talking about. So we have trying to balance our portfolio in such a manner the impact of commodity should be minimum. Like now everybody is very happy and celebrating about the crude correction which is happening, but that I believe that crude is still in the cyclical uptrend. Okay, so you can see maybe crude can correct maybe closer to 90 or 92 mark, then it again inch up. Okay, that is the phase which we are in market, and I'm not going to be surprised, which I've said earlier, that you will see another lifetime high in crude, and maybe I'm not ruling out even the current financial year itself. So we have to rebalance our portfolio and like to maintain a skewness toward commodity stocks. Okay, so it's not every opportunity which when market gives you in these names, I will be buyer in these names, and that's the way we have increased our exposure to the power sector or energy sector in particular.
Sandeep, just taking a look at the Quant Mutual Fund as well, with an AUM of over $1 billion. It's grown very smartly from about 136 crores in March 2020 to close to 7,600 crores right now. And you've been talking about, really building the portfolio and what the focus is of the mutual fund. But I just wanted to understand how, in this time of inflation as well, Quant MF is looking at protecting one's portfolio in terms of stock and sector allocation.
So we actually follow our own framework of VLRT framework. Okay, so we try to balance our portfolio in such a manner that we give 1/3 weightage to the valuation analytic, which is largely cash flow based analytics, and we also give a 1/3 weightage to the risk appetite, which is largely sentiments, and 1/3 weightage is given on the global liquidity. Okay, so when you combine these three things all put together, and all these three analytics are skewed on one side, it gives me better timing, and it would actually help me in taking a better risk adjusted returns, because the timing really help you in reduction of your risk profiling. So it is a myth when people talk about we should not time the market. Actually, timing really helps, and this is one of the reasons why we are able to outperform the market, our benchmark, quite decisively. Like the majority of our schemes are now trading at lifetime high NAVs, as the market is not trading closer to the all-time high. So that is the big difference, which our framework really help us in taking big calls, or taking a timing call when to prune down the exposure or when to increase the exposure. It has been working quite well since we implemented VLRT framework from September 2019.
Just in addition to that, Sandeep, your value theme continues, but you think growth stocks also may bounce back if the market were to overall across the board do well?
So, like I said, that right from the, let's say for last 10-15 days or so, we have seen up move. So we are post crude and commodity prices correction, risk on environment is back. Okay. So, but again, from a very near-term perspective, yes, growth stock can also rally because they have also corrected a lot. But we have to keep in mind that's from a longer-term perspective. We have seen from the perception analytics point of view, the growth stocks has peaked out way back in 2021, September 2001. Since then, it has corrected. But again, I always highlight that any move will never going to be linear. So we have seen significant underperformance of growth stock as compared to value stocks globally. I think it's a maybe corrective phase, so maybe it can last for a month or so, where risk on environment, as long risk environment remains there, you will see growth stock outperforming from a very near-term perspective. But if I have a medium-term and longer-term perspective, I still maintain value has a potential to outperform growth, and India has potential to outperform emerging market, which is still outperforming, and I think that theme will continue. So India should be also a biggest beneficiary with this thesis, which we have been talking about.
Continuing to remain very bullish on the India story, talking about financials having the ability to outperform technology, and how crude is, won't be surprised if we see another lifetime high in crude oil prices. Sandeep Tandon, always a pleasure interacting with you. With news that we're at 18,030 on the index, finally a 2% notch up on the frontline indices and close to 1% within the broader markets. And financials, of course, driving the up move. We'll slip into a very quick break and be right back.